Hello, everyone. It's late afternoon. Hopefully, we can have an energetic conversation here and maybe wake you guys up. It's a good time to get coffee right behind. Welcome to the investment and investment thesis panel. We have had a slight change. Geoffrey couldn't make it. He was stuck in LP meetings. He couldn't make it, but Kevin has kindly agreed to take his place. So Kevin, thank you so much. What I'm going to do is I'm going to just ask everyone to introduce themselves, and then we'll just jump in directly.
Hey, Salil, so it's going to be like a discussion.
This is going to be a discussion.
People from the audience will ask questions.
Absolutely. And this is not one of those panels where I'll ask a question, everyone sort of takes their turn and answers. This is random access, right? So we purposely have this panel with 2 investors and 1 person from the M&A side. So we're looking at both sides of the equation. And we're trying to look at today's timeline, and we'll look at a timeline 5 years from now. So if you have questions along the way, feel free to raise your hand, and we'll get those questions in, right? Except you, Roger. Go for it, my friend.
Great. Thanks, Salil. And I think most of the audience was caught the last panel, but for those who just joined us, Kevin Zussman, I'm with a venture capital firm called Cultivian Sandbox. We're based in Chicago, investing exclusively in the food and agriculture space. We've got 3 funds under management, about $300 million in capital commitments across those vehicles, and we're currently investing out of our recent $135 million fund. Although food and agriculture is our only focus, it tends to be a pretty broad mandate. So we cover technologies within the animal health space, crop production, food safety, supply chain, water technology, basically any technology that touches the food and ag value chain. Tend to be early investors as well as active investors. And behind our investment team is a group of strategic investors who we work with collaboratively to make investments in this space.
Good afternoon, everyone. My name is Laurie Menoud. I'm with the corporate venture capital arm of BASF, the chemical company, and I'm responsible for investments in digitally related startups in North America. So BASF, quickly, it's roughly a $70 billion business. We produce chemicals and materials. Agriculture is a big market for us. We produce seeds, crop protection products, and we also have a digital farming platform. Our venture capital fund has been around for quite some time now. We were set up in 2001. It's a $250 million fund. Our sweet spot is Series A, Series B. And we invest in companies that are going to have an impact on our business. So AgTech, from new molecules, new crop protection products, up to robotics, and also animal health are of interest to us.
Hi, everybody. My name is Erica. Thanks again for staying. And I am a principal investment banker at Global Capital Markets. I was pleasantly surprised that this is the Global Capital Summit. No affiliation, but very exciting. So I come this from a very unique perspective in that before I became an investment banker, I was a grower, and then I was also a lawyer for Roger before I did M&A. Got into M&A on the investment banking side. So what we do at Global Capital Markets, we don't have our own fund. We broker transactions between companies and the investors they're looking to partner with. And that could be anybody like a VC fund, a strategic. A lot of times it's private equity. So unfortunately, Jeff couldn't be here. And as well as debt providers. So you see a lot of debt transactions, especially on the hardware side in agriculture. What else was I going to say? Yes, we are located in Irvine, and I am located in San Francisco.
Thank you. I'm going to actually kick off with a question for you,
Okay.
right? So could you tell us the state of the market today in terms of what the acquirers or late-stage investors, very late-stage investors are looking for in the market? I mean, what areas do you think there are holes in that they want to acquire, or what areas that they feel are sort of underinvested? From a late-stage perspective and acquisition perspective.
That's a great question. So today, especially if you're an acquirer, the typical mindset of those investors, right? Things need to be de-risked. The revenue channels need to be more than one. You cannot have customer concentration. That scares off late-stage investors to a certain point. The big gap that is currently in the market that a lot of later-stage investors are looking for, or acquirers, is the supply chain behind certain products. So a good example, I had a private equity fund come to me, and their investment thesis is in distribution supply chain, not of agricultural equipment manufacturing. But they're really interested in the trend of alternative protein. So they came to me and said, Erica, I want to invest in the company that produces the molecules in order to make alternative protein. I don't want anything to do with alternative protein, except I want to own the supply part of alternative protein, which is mostly, actually, it's more of a pharmaceutical investment. So that's an interesting outlook that I'm seeing a lot more of in terms of distribution of new technology, but how to actually get it to market. A lot of the private equity or later stage funds, they understand that space, they understand that way of thinking. It's still manufacturing, it's still transportation, logistics. So they're very comfortable with that part of the industry.
Yeah, that's great. And so what you're really saying, which is interesting, is it's not just ag companies. These are companies in other sectors, supply chain and others, that are interested in ag as a vertical. Yeah. You know, ag is too important a vertical just to leave to people in ag, right? So other companies are starting to move in. Where do you see from an early stage perspective? And when I mean early stage, you know, you tend to make investments which are going to be quote unquote ripe over the next few years, 3 years, 5 years, some of the big ones over the next 10 years, right? So rather than today's perspective, what's your perspective of things that you guys are investing in today that you think will be ripe for the market in 3, 5, and 10 years? Starting with you, Kevin, what do you think?
Sure. I guess piggybacking off of Erica's comment on the alternative protein space, it's an area that's of interest to our fund and where we have invested in the past, and I think we'll look to continue to invest in the future as well. One of our first investments out of Fund 3 is a company called Geltor, and they're essentially producing animal-free proteins using an age-old technology called fermentation, but with advancements in synthetic biology and tools that they have at their disposal, they can produce all sorts of novel proteins that are natural or synthetic depending on the market that they're playing into. Right now, they're selling into the cosmetics market. They can produce very, very small quantities at really, really high price points that get formulated into the final product. It's a collagen-based protein for skincare applications, and over time they can use the same technology to produce all sorts of protein ingredients that go into a variety of food products, whether it's a texturizing ingredient, an emulsifier, or a protein for nutritional consumption.
So it's almost like a multi-vertical, a multi-sub-vertical area where you're saying really it's a protein, so it's definitely something in the food chain. But the initial application is more collagens and more skincare, right? So there are probably less regulatory issues around that. But the idea long-term is the same protein could be used for food and other materials as well.
That's right, the same or different
or
proteins. And I think you're spot on with some of the regulatory issues, but I think also from a technology scale perspective, right now they're at, I would say, semi-commercial scale where their volumes can't serve a huge market like food and beverage, where even though it's huge in terms of volumes, it's pretty low from a price point perspective. So they found a really interesting niche in cosmetics and skincare where they can sell in pretty large quantities for that market, even though it's in the grand scheme of things, it's low kilograms per use.
Awesome. Laurie, your perspective?
So on my side, I would like to talk about robotics and automation. So it's something we have made an investment in a robotics company, and it's something that we see is going to disrupt the industry. So when you look at the biggest problem for farmers today, it's labor cost and labor shortage. So there is a big need for automation. And at the same time, it's also disrupting in our industry, because if tomorrow you don't need to spray, for example, herbicides or pesticides all over the field, but you use a robot to spray precisely those pesticides on the weed or on the plant, then it's going to disrupt our business. So we want to invest in those companies to really start thinking about new business models and get ready in 5 to 10 years from now when we'll see those technologies broadly used by the growers.
What are some examples of stuff that you feel, you know, in the robotic spaces, you tend to look at things that could solve today's problems, right? Literal labor shortage. And then there are things that could solve tomorrow's problems. It might be growing food in areas which can't be grown because you just can't even go there, right? Whether it's on this planet or others. what are some examples of companies that you feel are sort of ready for kind of that big jump? It may have you. Maybe they're doing some interesting stuff today, but they're really geared for handling tomorrow's problems.
I don't know if the companies are there already today, but for example, the small satellite industry. So I think in the future we'll see very small CubeSats that will probably cover the Earth globally and will provide connectivity in very remote areas. And it's a big problem. It's already a problem today for growers, but for companies like BASF, where we want to really provide a digital platform, if we cannot access the growers or customers, it's a big problem. And I hope to see companies really focusing on the small satellite industry as a way to provide communication globally and connectivity globally.
Do you guys see, we were talking earlier, and we talked about a trend that we're seeing in other spaces, right? So if you look at, places where there are industrial era companies were still alive, industrialization took on this meaning that you would extract as many resources as you can from the planet, right? And so industrial nations and industrial companies tended to have a high resource utilization. And what we've seen over recent times is that has gone down dramatically. As these industrial era companies get disrupted, the utilization of these assets drops quite dramatically. Case in point, if you look at sort of the energy consumption in the US, electricity consumption in the US, right? In the past, what used to be is the growth of the civilization or the US economy was directly tied to how much energy we're consuming. So economy grows, energy consumption grows, and vice versa. And what we started seeing is this starting to get disconnected. Things are get dramatically more efficient. If you look at what's happening with electricity consumption in the US today, it's flat. That doesn't mean the economy is flat, the economy is growing, right? So one of the areas we sort of start to look at things is saying, what are those companies that are essentially making things dramatically more efficient? Not just 5, 10%, 10x more efficient, right? And one of the examples earlier, Kevin, you gave me was, lab-grown meat, right? Is perfect example. Could you elaborate that and add your thoughts on?
Sure, yeah. I guess, one of the claims that a lot of these lab-grown meat startups are making is that because you're growing it in a confined space, you're not, using the resources required to grow the feed and then feeding the livestock and using resources to grow the livestock. You're able to produce the same quantity, but with a much lower carbon and water footprint. I think that's true in indoor production of meat, but also I think there are companies that are making the same case for indoor farming. There's been an explosion of funding rounds for vertical farming operations, greenhouses to some extent, and the claims are pretty similar in terms of the carbon footprint and even the physical footprint that these companies are able to produce, the same quantity, but with a fraction of the resource requirements. Also, I think a trend that we're seeing is, which it kind of goes to your point, Salil, around leveraging, resources. I think if you look at the crop protection chemical industry over the last several decades, the status quo has been product sales. These companies have been producing and selling products. But I think what's interesting, and at least as it relates to some of the largest digital agriculture acquisitions in the last couple of years, with Granular being sold to DuPont or now Corteva and Blue River being sold to John Deere, is these companies are really deploying a service-based business model where if we're heading into a trend where the volumes of active ingredients are going to go from X to 10% of X because of see and spray machines that can selectively apply herbicides or workflow management tools to precisely apply different nutrients on the farm, then large companies are going to want to participate in a trend like that. And I think that's why we're seeing a little bit of these acquisitions lately.
Laurie, your perspective, anything?
Yeah, so on the topic of more from less, if I can add also maybe on the crop yield side, technologies that can improve the yield of crops. So with the same surface of crops that you have, you can produce way more. And we see technologies such as digital breeding as a way to produce new seeds, non-GMOs, that will be, for example, able to provide 10x more protein. And for the whole plant-based market, I think it's something that is going really to be disruptive in the future.
What about, Erica, from the acquirer's perspective, maybe too soon, but are you starting to see people saying, look, you're looking for efficiency plays? We started seeing this in other industries, right? Car companies, right? Perfect example. 20, 30 years ago, you weren't necessarily seeing efficiency as an important thing. Now efficiency is like paramount, right? Are you starting to see the thing? I mean, one of the things we like saying is to say, look, inefficient companies or wasteful companies will be seen like the tobacco companies of the future, right? If their stock trading in the open markets, you may find millennials or younger generation not buying that stock because they said, look, we don't want to put money into a company like that. They're wasteful, and they're going to be wasting the planet's resources. Other people won't want to buy the stock. Maybe too early. We're starting to see early signs of that on Wall Street, right? BlackRock is one of the ones who sort of made those comments. Any thoughts on that? Any other?
Yeah, so my thought on that, I'm going to tweak it or turn it on its head a little bit, is you're starting to see what happened in kind of AgTech 1 or AgTech 2, some people say we're on AgTech 3, is it was precision-based, and you were targeting a specific crop, plant, whatever. Your technology was applicable to one thing, and that was really inviting to farmers who have been looking for these solutions for a long time. Then in AgTech 2, you kind of saw, okay, we're multi-strategy, now we're farming as a service. We can do a bunch of things because we're partnering, and it's, as the previous panelist Aaron said, it's very collaborative, and it's always been, but even more now, the fragmentation is starting to disappear a little bit. In this AgTech 3, and a little bit into what's happening in Wall Street, is when you think about ag and food, it's so holistic and it's so personal. And so what the messaging that startups have to figure out, especially to acquirers, is we've looked at the broad strategy and we have a multi-level effect. And the companies that are able to communicate that in a way that is going to be receptive to consumers will win in terms of the market. And investors have the means, even if you don't have the perfect team or maybe not the perfect technology, they are thinking in a multi-step plan as well. So they really are attracted to these companies, and how that is filtering into Wall Street is CSR, corporate social responsibility, all the sustainability measures and practices. So when I think about efficiency, being sustainable, we're able to sustain ourselves longer, we're doing more with less. It's much more the sustainability conversation as opposed to just being efficient. And I don't know if that's a good answer, what you're thinking.
What we're starting to see in our place, take data centers, right? Yes, it's a sustainability conversation in terms of being able to make sure the carbon emissions are low, but it's also an efficiency conversation in terms of your business model is going to work very, very differently, right? Because if you can do 10x more with less resources, you actually have those many more profit margins, which are more reminiscent of tech than traditional industries. And the proteins you talked about was a very similar example, right? Why is this a tech business now? Because you're now 10x more efficient. You are no longer industrial era. So that to me is a shifting of the terrain. Roger, any questions to add before I open out to the panel, to the audience? Please, you may have to yell out.
One of my mentors used to say, Professor Albert Bartlett, that the biggest shortcoming of the human race is our inability to understand the exponential function. In the next 50 years, we're going to have to produce and distribute more food than what we've done since the beginning of time. We build simulation models. I have a research lab, and what's very interesting is that food production and distribution supply chain is only as strong as the weakest link. And I'm curious about the investment that's going in there. Who's paying attention to making sure that you are investing in all those weakest links? Because there's two problems: being able to produce that amount of food and then to distribute it, to get it to the places. And we've got limited infrastructure, roads, rails, ports. Nobody's investing in those things anymore. So I was just curious about the panel. Are any of the venture capital funds looking at this overall system and making sure that each part of that system is attracting the right amount of investment? Because you could double the production, but if you can't get it to the people, you're going to be wasting all of that investment. Sorry, a complicated question this time of the afternoon.
Yeah, and I'll also add on to that question in terms of, we didn't talk about water, right? But water is going to be one of the major issues as food production is needed. Water is going to be a major issue, as we're already talking about wars being fought over water, right? So water tech is also becoming important. Any thoughts on his questions?
Yeah, I could start. So, can I forgot to say this. So global capital markets are historically, the majority of our transactions are in distribution, supply chain, and manufacturing. So I'm glad you asked that question. So we actually, I don't know as much about the VC side, but on the private equity side, when they think of these investment theses for that specific fund, they really are taking that approach of how can I make that 10x and 10x effect in order to get the ROI I need, and what is the plan of action in order to find the investment to do that. So on the distribution side, you are seeing, so I gave the example earlier, but in other more transitional distribution like logistics, all of the AgTech software. I mean, now you may not know this, but in order to get lettuce from Salinas to New York, it takes about 2 to 3 days. And there's a lot of technology and startups who are trying to route, like we already know that maybe that lettuce won't get there. Well, how do we reroute that pallet or that truck to St. Louis instead so it's not wasted? So that's a good example where it is very intentional because of if you get that efficiency, you'll get that profit margin. You won't waste it. The second thing I wanted to say, before I forget, on the water side, water markets. So a lot of investor conferences geared toward more fund-based conferences. Lots of water markets springing up, not here, but there has been a lot of success in Australia. A lot of people are watching the Australian water market and how it's doing, and it's doing very well. So it's definitely how we view water as a resource, and the war of water and all of that in California with all of the new regulations. It's definitely changing, but there is actual business transactions happening around water in Australia and other places.
So one thing I love to say about what you talked about, your question was also about, is someone playing a macro role in making sure all these things happen, right? So typically most venture capitalists don't take a macro perspective from an industry side, right? Your funds are not big enough to necessarily do that. However, one would like to believe if markets are efficient, the market will address that, right? So to me, part of that goes to the efficiency question. If you can make production of these resources and distribution of them highly efficient, then the market will figure out a way to fund them. I don't know if that means investors will start investing in roads and transportation, because that's not typically what a venture capitalist does, right? But what you might do is you might invest in a company that figures out some way of growing as much as things locally and then distributing it much cheaper than any other way of doing that. And that might require them to build their own roads to get it done. That's something that's more likely. Laurie?
Just wanted to add a point about this whole topic. So yes, we need to produce more. We need to manage distribution. But something also we have to realize is that today we waste 30% of the food that we produce. So there is a whole topic about, can we use technology as a way to reduce waste of this food, better manage spoilage, for example, of food? And indoor farming is a whole field that can help with that. If we manage to produce the food closer to people, maybe we'll be able to not have so much waste around food production.
Yeah, I guess I don't have too much to add, but I do think it is a great question, a complicated question. I think one of the theme from today was, think globally and act locally. I think that really applies to a question like that. I also question whether it's the role of a venture fund to address some of those issues. Our mandate is to return capital to our LP base and do that in a fixed time period. And but to kind of circle back to the sustainability discussion, I think in this current generation of AgTech companies that are coming to market, that we're not seeing this trade-off between efficiency and sustainability. A lot of the sustainability is baked into the business model of these technologies. So as these products and technologies go to market in the US and scale up around the world, I think we'll be addressing some of those infrastructure and systemic problems that you bring up. I think, structurally there are foundations and groups that are co-investing with venture funds to support some of that. I think it's interesting to see the Gates Foundation expand their principal investing arm to support AgTech investment. So when there's a company like AgBiome, which is producing biological microbials for crop input applications, as they're looking to deploy in the US, Gates Foundation can co-invest and basically have exclusive rights to distribute those same products in developing nation so that the entire world can kind of participate in the revolution of AgTech.
Please.
Hi, one of the big issues you do not address, especially in California, is that we have ample land, but due to the politics of water, you go drive up 99, there's a lot of fallow fields, and we're underproducing. We're leaving money on the table because of the politics in Sacramento and thinking that a fish that's non-indigenous and the farmers are not getting the water. So that is the problem. It's this delta smelt. Have you ever drive around 99 and see the farmers? They can't get the water.
I'm sorry, what was the question?
The question is a lot of this is politics. You can only do so much AgTech, but don't give the water to the farmers, they'll not be able to grow. That's the issue. That's the California problem.
We had a question there somewhere. Go for it. You need a mic or? I'm sorry, what was the question? Kevin, do you understand the question? I'm sorry, this might be a good conversation offline. This may be more of a discussion than anything else. Any other questions before we wrap up?
Excellent panel, by the way. So I have a two-part question. We are beginning to see a lot of convergence of technology initiatives across verticals. So one question would be AgTech with food. I spend time in fintech and digital health tech. So wellness is a big thrust, preventative health. So I would like to know the initiative of all of you from a wellness perspective. How is AgTech coming in? That food growth, wellness goes together. And the second one would be, again, fintech would be at play at both ends, top line from a growth, efficiency, but also bottom line. So efficiency would hit at both sides of the equation.
Yeah, I mean, one comment before we pass on. The question is, how do you see the interplay of these various different verticals or markets? For example, we talked about wellness. And wellness plays right into AgTech because it's food. So there's a relationship between wellness and food. Same thing with fintech, right? Because many of these projects, especially as we talk about things which are global scale, the issue becomes money doesn't flow into those projects quickly. You might actually fund a company, but the company needs working capital, right? Or you have a number of smaller players who are going to build things out. They're going to need working capital. So this becomes as much as a play for fintech as it becomes AgTech, right? So are you seeing any interplay, any players right now which do those kind of interplays, companies that do these kind of dual interplays?
Sure, yeah, happy to at least try to address the first part of the question. I do think traditional lines across industries are blurring to a certain extent, especially as you look at animal health and human health, or human health and crop production. When you think about the same tools that are being deployed across these different sub-verticals to develop new technologies, whether it's microbiome-related technologies or biologics, feed additives in the animal health space as alternatives to antibiotics, a focus on nutrition for preventative health in the human health space. We've been spending quite a bit of time at kind of the intersection of food and health, looking at ways to kind of play that sector, which led to an investment in our prior fund in a company called Neuritas, which is basically an AI drug discovery play looking at the genomes of naturally occurring peptides, of looking at the genomes of naturally occurring plants and food products like an apple, and seeing if you can take a peptide from an apple and extract it and scale it up to see if it has bioactivity to either be sold as a nutraceutical or have a pharmaceutical impact, because it's because it's naturally occurring, it has favorable paths to market from a regulatory standpoint. So
Laurie, any comments? Anything else?
No, I think I agree with, maybe just to add diagnostics and ag. I see more and more companies developing diagnostics tools for healthcare that can actually be applied to ag.
Yeah,
when we look at, yeah, exactly, and when you are looking at detecting pests and diseases in the field, you can use the same tools that you use for humans for plants. So
Erica, you had a quick one.
Yeah, quickly, I'm actually speaking on AgTech and FinTech in Miami next week. I'm giving a case study. So my 3 examples next week, blockchain and how it's facilitating payments faster to growers, which is a hugely underserved problem. I'm going to be talking about new farmland investments and how the modeling of farmland investment and how FinTech's involved in that. And then what seed broker companies are doing, which in their business model they build in tech as part of their services. So it's very interesting because the growers don't have to pay for tech. That's going to be another interesting competitive.
Thank you, Erica. And just as a plug, I believe Roger actually teaches a course at Stanford on blockchain. Yes, I do. Yes. So those are guys interested in the FinTech and AgTech side, specializing in AgTech and FinTech. Thank you, guys. Appreciate it. Thank you very much.